because in the next 15 minutes, I'm going to show you all the ropes, all the rules, and everything in between step by step so that you can start using this strategy in the next 24 hours. But make sure that you stick until the end and stay with me. Now, just in case any of you are skeptical about what I'm talking about, I'm going to show you my actual broker account right here. I'm going to show you some losses, some wins, everything. I'm not holding anything back. And you can clearly see that in the last 30 days, I've made over $22,000. Also, this month alone, I'm already up $12,000 and it's only the 10th of December. You can see it right down here. And unlike any other guru, I'm about to show you that I can refresh this, no problem. Are we gonna get the exact same number? I'm not too sure. Yes, we are. So just to show it again this month and also in the last 30 days, up over 22 grand. And in the last year, with withdrawals in every broker together, I'm up over 6 figures. Now that I've shown you that you can trust me, let's actually learn the 1 hour trading strategy. Let's zoom out for 1 second. This is some crazy video that talks about liquidity, the news around the world. This 1 hour strategy uses a simple time frame, one simple candle, and can be taught in 3 small steps. We first have to wait for there to be a 1 hour break of structure, guys. After we get the hourly break of structure, then we wait for price to come back into our deepest S&D. Now, I know a lot of these words might be new to you, and that's completely fine. In this video, I'm going to show you everything step by step. I'm going to break everything down. I'm going to show you what the break of structure is. I'm going to show you how to find your deepest unmitigated S&D to make sure that you can cross off the boxes the exact same way that I have been doing it. And last but not least, you gotta wait for a candle to close as a 3M candle right after price taps our S&D range. And once we cross everything off, then we enter the trade and make money. You see, guys, 3 simple steps, all in one time frame, all really waiting for a sequence of events to happen to then enter. Everything is calculated. There is no fluff. There is no ifs. You know exactly what to look for every single day. And look, I know exactly what you're thinking. If it's so easy and simple, then why doesn't every single trader use this strategy and make 6 figures, millions? And the answer is really easy, guys. 2 small things. Most traders, one of these is probably going to be you. Most traders bury themselves in 5-minute charts or really just lower time frames, using many indicators, alerts, and tools, so much that they never stop to see what's going on in the 1 hour. And this is what makes them lose trades. And the craziest part, guys, is what really hurts a trader is not the winners, it's not the losers, it's the missed trades. The trades where if you were actually there and you were actually a trader and you took this seriously, you wouldn't miss. And it would make it so you actually see your strategy through. And also because 99% of traders end up failing, guys. Most traders, and maybe this is some of you that have quit in the past and have come back into trading, quit right before the wins are around the corner. But you would never know that, right? Because you end up quitting. That's why. Most strategies do work, guys. But a lot of the times, and many people won't tell you this, is that missed trades are the ones that hurt the most. The ones that don't let your equity curve actually show you the profits. But with this strategy that I'm about to show you, that is not a thing whatsoever. I promise you, I'm not only going to give you a full strategy that you can recreate as quick as tomorrow, but also hopefully this shows you that as long as you stick to trading into this strategy and you see it through, your profitability is around the corner. Now, before we get started with the whole strategy, I need to first show you the tools that you're gonna be using to make it all happen. 3 simple tools. That is it, guys. Nothing crazy. Number 1 is gonna be the 3M candles. So I'm going to show you what a 3M candle is. Number 2 is the 3M trading indicator, completely free, and you will see why we're going to be using one indicator. Super easy to understand. And last but not least, I'm going to explain to you exactly how I use supply and demand zones to make thousands of dollars with this 1 hour strategy. So make sure that you hit that like and hit that sub. So if you've been following me for a while, you know that this is everything for me. A simple candle. I've used it so much and it has changed my life in such a crazy way since I created it with my partner Spencer that I even have the 3M candles right here on my wrist. But what is a 3M candle, guys? It's simple. You can either have a bullish or a bearish one. In this case, you have both. And the bearish scenario, which is right here, is just a candle that has a wick that takes out the previous candle's high. You guys can see that this is the current high of the previous candle. Now, the 3M candle right here creates a new high and closes below the previous candle's high. And that is it. Now, on the other hand, for a bullish, it's the complete opposite. We have this bearish candle right here. We can clearly see that this is the low that it ever went with the wick. Now, what does the 3M candle's low do? It takes out the previous candle's low right here, goes back in and closes above the low, making it a 3M candle. Bullish though. And that is it, guys. Why are these candles right here, this one and this one, not a 3M candle? And that's because none of its lows or highs took out the previous candle's highs or lows and closed below or above it. You guys can see it right here. We have the previous candle's high, and what does this candle do? It has a close above the high, and the next candle has a close above that high. Now for this candle right here, the next one, we have the previous candle's high, but this one has a close above that high. Now, if this candle right here would have closed below the high, then it would have been a 3M candle, a bearish one, and so on and so forth. Now you guys get it. For tool number 2, guys, the 3M structure indicator. Yes, it's free. Yes, it's custom coded by my developers, and it's costed me over $30,000. You guys get it for free. Why? The exact same reason of why I make YouTube videos, because if I use it and I make money with it, why should I charge for it? Now, if you want access to the indicator for completely free, all you gotta do is tap or click the first link in the description. The top one, it's gonna be labeled as get my free course and my indicator. There'll be a channel inside of my WAP called 3M Trading Indicator Access. You go, you put your trading view username right there, and you get it for completely free. And what this indicator is going to do is show you the way I see charts, the way I see breaks of structure in the certain time frame that you're looking at that time. So let's say, for an example, this is the 5-minute right here. This is what it will look like with the indicator, and this is what it will look like without the indicator. Now, with the indicator is on, which is right here, you can see the ranges. You can see right here, this protected low gets broken, and now we're in a bearish range. Now right here, we get a break to the upside, which puts us in a bullish range from this high to this low. And as soon as we get the breaks, you guys can see these lines right here show us the ranges. Now, after we get a new break, then the indicator gets updated and shows us the new bullish range, which is from this high right here and this low right here. You don't need the indicator, right? Like, I can see everything without the indicator. But why would you make your life harder if you don't need to? So instead of having to see where is the low, where is the high, and see this, and then if there's another break and everything and so on and so forth, you get it for you automatically there. And it makes your quality of trading so much better. So make sure that you add it so that you can see new ranges, because we're gonna need to see every single range as it gets updated for the strategy to work. Last but not least, S&Ds. Now this one is going to be kind of like the indicator and the S&D mixed in together, because we first are going to need a break of structure. Break. I'm going to not only show you a bullish scenario right here, but also a bearish scenario, so you guys cannot leave this video and say, oh, Raza, you did not show me everything. Now, starting with the bullish scenario, like I just said, we're going to first need a break. So let's say price is right here at this candle. We have a break to the downside. That's completely fine. As soon as we get this bullish break right here, which puts us in a new range from this high and this protected low, then we can start looking for our S&D within this range. I'm gonna say that again. The range is from this high right here and this low right here. So our S&D, which is going to be just a candle left behind with an imbalance, needs to be inside of our range. So in this case, it would be inside of this. I have labeled our S&D as it being this down candle right here. And that's because after price left this candle's range from this high to this low, it never came back in it, making it an unmitigated candle because it never got tapped again after it closed. I know that a lot of you guys are gonna say, well, this one's also unmitigated because you can clearly see that price after it left, it never came back. But like I said earlier, we're looking for the deepest unmitigated S&D, which in this case is going to be this one, because it's the deepest one inside of the range from the low and the high, and also because it's unmitigated. Now for the next break, we get it right here. That's the break right there. After the break happens, we have our new protected high, which is from this high, and the low of the range is going to be right here at this protected low. So our range in this case is from here to here. So our candle is going to be right inside of this. In this case, this one is not going to be our S&D. Why? Because it's not the deepest one. You can clearly see that there is a deeper one because this is the low. So we're gonna start from the low. You guys can see right there, and then this up candle right here at the bottom is our deepest unmitigated S&D, because after price left it, it never came back in, making it unmitigated and also the deepest because it's the closest one to the bottom of our range. And that's it for the bullish area. And for the bearish side, is basically the exact same thing, but opposite. So what we're first gonna have is bearish ranges. You guys can see it right here, a break to the downside right here, a second one right here. And every single time that we get a break, so a creation of a real range with a high, a low, another high, and then another low, we're then gonna get a supply zone. In this case right here, you guys can see this is the deepest unmitigated S&D right here, and that's because it's the deepest candle inside of the range that has not gotten mitigated. Right here, the exact same thing, from this low to this high. This candle right here is the only candle and the deepest candle that has not gotten tapped after we got the break inside of this range. Hence why it's the deepest unmitigated S&D. Now that you've gotten every single tool, we can actually head over to the part where I teach you how to put all the tools together to make the strategy. Don't forget to tap the like. And of course, at the end of the video, I'm gonna show you real-time examples of the trades that I've taken in the last week. And you know what's crazy? I'm about to give you all of this, guys, with a checklist. So first things first, we're gonna need a break of structure. You guys can see it right here. We clearly don't have any just yet. Right after that, we're gonna need price to come back into our deepest S&D. You're gonna see we're gonna draw it with the square, and as soon as price comes into our S&D's range, basically the candles range, then we're gonna need for it to print a 3M candle. And as soon as we get a 3M candle printed inside of the deepest unmitigated S&D, then we're gonna buy stop the high. And I'm gonna show you exactly how to do this. Step number one, wait for the 1 hour to break. So for that, we need the 1 hour to go ahead, come up, break this line right here with a candle's body close, and then give us a new low. And this is what it looks like. We get the break. So now we can give this a check mark. Now for step number two, we wait for price to come back into our deepest S&D. So for this, we need to find it. And we can clearly see right here that there is this candle right by the low that has not been mitigated. It never came back into its range, making it our deepest unmitigated S&D. And there you guys have it. So now what we're waiting for is for price to come back into our zone. And inside of here, and inside of this range, we want there to be a 3M candle that gets printed. So we'll wait and see if we get it. And right here, we can clearly see that we just got the 3M candle printed inside of our S&D's range. And for the last step is, of course, putting our entry, our stop loss, our break even, and our take profit. Our entry line is going to be at the candle's high, and our stop loss is going to be right below the candle's low. Same thing, half a pip, basically a pip right below it, just to give us a little bit of a wiggle room in case we get wicked out or whatever. And then for our take profit and our break even, we're going to be targeting the previous high, which is right here, the current one. And for our break even, we're going to be targeting a 1-to-1. So as soon as we hit a 1-to-1, which it should be around here, we'll be going break even. And that is it. Let's do that again. So step number one is going to be waiting for our break of structure right here. So when it was happening right here, we don't touch it. Step number two is finding our S&D. We found it right here, and waiting for price to come into our S&D. Now the price is inside of the S&D. We want price to give us a 3M candle, which you guys can see it. It's right here. Also with the indicator, it will be highlighted either with green if it's a bullish 3M candle, or with red if it's a bearish 3M candle. And last step is going to be putting our entry right above the high, stop loss below the low of the 3M candle, break even at a 1-to-1 RR ratio, and take profit at the current protected high, which the indicator will be showing you that. But that's not everything. I'm still going to show you examples of real-time trades that I've taken over the last week. I just realized that I haven't shown you guys the full result of this trade. But let me just show you, because this actually ran crazy. There you guys go. It ran the high and even more. Now let's actually get into the example. Step number one is always waiting for price to come and break the current protected high to give me a break. You guys can see we clearly get that break. Step number two is finding our S&D, which is right here. And step number three is gonna be waiting for a 3M candle to get printed inside of our S&D zone. Okay, there we go. We get our 3M candle right there. We put the entry at the high, stop loss a little bit below the low, and we target the current high. Of course, at the 1RR multiple, we're gonna be going break even. So here you guys go. That's going to be our break even line. Let's actually label it. Boom. Okay, at this point we were break even, and right after, boom, we hit our target. Now for another entry, I just need another break and then another mitigation of the S&D, a 3M candle to get printed, and boom, that's it. And we get a new break. We find our deepest unmitigated S&D, which is clearly this one, and then we wait for price to come into our S&D and give us the entry. A new range, so now we look at an S&D in our new range. And in this case is a really special case. There is no S&D. So for that, we can use the latest candle that made our break, because that's the only candle that's not unmitigated. Now the price is inside of the S&D. We're just waiting for a 3M candle, which you guys can clearly see we are getting it right now. A little side note, I don't know if I told you guys, you need to be using buy stop orders. We're not going to be using market orders or limit buys. No, only stop orders. Just we want to see momentum. I don't want to just get entered when the 3M candle closes or at a certain level below that. No, I want to see price just explode up. So you see, you guys see, we get the volume, we get the momentum, price goes up right away. Now this is the target right here, but our break even is going to be right down here, and our target is going to be at the current protected high. Okay, right here we're break even. Let's see if we get our take profit, and we did get the take profit. And those are basically the examples that I'm going to be going over today. Of course, there are many more, and if you want to check out more of my trade breakdowns, all you got to do is check out the playlist that's popping up right here on the screen. It's going to give you every breakdown of every single trade that I've taken over the last 3 months, ever since I started this YouTube channel. But as always, let me know in the comments what you guys think of the strategy, if you're willing to use it, if you have any questions, and follow me on Instagram. And of course, if you want my free 5+ 10-hour course, it's the first link in the description. And also, if you want access to this 3M structure indicator, which not only shows you the ranges but also highlights the 3M candles so you can see them more clearly, of course, check the first link in the description. But as always, thank you for watching. Don't forget to subscribe and hit that like. See you guys in the next video. Peace out.